upon the table.
The Republican-controlled Congress voted to approve the biggest tax overhaul in more than 30 years. The plan includes steep tax cuts for corporations and wealthy taxpayers, as well as temporary cuts for individuals and families. On average, that's $900 for middle-income households and $51,000 for the wealthiest 1%, according to the Nonpartisan Tax Policy Center. Republicans insist their bill will boost economic and job growth. Democrats oppose it, saying it'll deepen the income gap between rich and poor Americans and add $1.5 trillion to the federal debt over the next decade. Moody's chief economist John Lonsky on the winners and losers.
Those corporate sectors that have high tax rates to begin with, such as asset management, banking, and retailing, stand to benefit the most. Other big beneficiaries include commercial airlines and railroads. On the negative side, we would expect hospitals and health insurers to be hurt by the end of the health care mandate. And moreover, private equity stands to suffer from the loss of the full deductibility of business interest expense.
For days leading to the vote, U.S. stocks rallied on the prospects of getting a tax code overhaul. Some equity strategists say lower corporate taxes will boost profits, trigger share buybacks, and result in higher dividends. Fiduciary Trust's Karen Pei.
While the market is focusing on the winners and losers of the tax bill and tax reform, it's important from our standpoint that investors focus on fundamentals. Tax benefits are more of a one-time boost, and in fact, when we look at the earnings growth, it is estimated that the corporate tax cut will boost EPS by about 5% for the S&P. But the market has started to price that in already, and it will really matter what companies do with that cash.
The Senate will vote on final tax legislation on Tuesday evening, potentially allowing President Donald Trump to sign the bill into law as early as Wednesday.